Hey guys, it's been a while. Hope you guys been well. And I just wanted to make a quick video going into the FOMC meeting. Obviously, a really big event. There's a lot of anxiety around how this meeting's going to go. Obviously, it's a big event in general, but it's also a first FOMC meeting led by Warsh. And there's a lot of like concerns around inflation and rate path, rate hike or decrease path in general. So let's kind of go over how the market has been this week. So looking at S&P 500. Obviously, we got that big conflict resolution from Iran. In my last video, I talked about a pretty high probability of Trump tacoing and something, some good news coming out of Iran. I thought it was going to happen mostly towards last Wednesday because I thought he was going to do it before the Treasury auctions. But I think it makes sense that he did it. Trump did it before the FOMC meeting to kind of set the scene for Warsh, and hopefully the FOMC meeting goes smoother. So we had this big rally, and we're kind of consolidating around here, just waiting to see how the FOMC meeting goes. And I want to share my baseline thesis as to how the FOMC meeting goes, what the result of that will be, and how that result will influence the market, at least for the rest of this week. So I kind of wrote out my baseline thesis or baseline scenario regarding the FOMC meeting. I wanted to kind of summarize my thoughts here. So I'm gonna break out the FOMC meeting contents into largely two parts. So one is the decision around the rate. And if you look at number one here, everybody's kind of expecting the rate to stay the same in this meeting. And I think, obviously I think that's still that's gonna go as expected. And I think the rate is gonna be announced unchanged, and this is already expected and priced into the market. And then the second part of the FOMC meeting, and that's the more important part, I would say, and that's the interview or the Q&A with Kevin Warsh, right? So he's gonna get a lot of questions from the reporters, and he's gonna have a lot of comments on inflation, the job number, and how he sees the rate change path going forward. So this is I guess this is where the market uncertainty comes from, but I am expecting his comments to be mostly neutral to even dovish. And I want to outline my reasons as to why. And the Fed's dual mandate is centered around controlling inflation and maximizing employment, right? So let's talk about inflation. The recent CPI numbers, obviously, they're higher because oil price is higher, but in terms of comparing against the expectation, they were mostly in line. So we didn't see, outrageous CPI numbers compared against the expectation. So the headline numbers are high, but against expectation is not too bad. And now with the Iran conflict, mostly resolved, it's easier for him to dismiss the inflation issue or inflation problem as temporary, right? Because if the Iran situation is resolved and the oil price is coming down already. The inflation coming from the oil price should now be resolved in the future CPI reports. So I think inflation side of that equation is kind of taken care of, easier to dismiss there. And the other side, the jobs report numbers have been higher than expectation. especially the latest one, that was significantly higher than expectation, and that's what triggered the sell off in S&P, right? Like this sell off here. Um, and I have looking at the latest NFP report results, I have a thesis as to why those numbers were so high and high why those higher numbers might be temporary. If we look at the breakdown of the latest NFP results, um, it says the job growth is mostly coming from the leisure and hospitality and local government sectors. And I was kind of surprised by this because I mean, I don't know. I felt like the vacation season hasn't really started that much, and I just didn't expect a lot of job growth in the local government sector. But I think that this level of job gains in these two sectors were tied to preparation of the World Cup. So if that is true, and we'll see if Kevin Warsh has any comments on that. If that is true, we should not see this level of job increase in these two sectors going forward. So it's that that gives Kevin Warsh an ammo to argue that the job report numbers came high because of preparation before that one-time event, and going forward, it's not really expected to come in significantly higher. So on both fronts of inflation and the jobs, I think that he's able to argue that both of those numbers are temporary. So, as he makes that case, as long as the comments were not hawkish, that would be seen as a positive by the market. So, as long as he argues that these two potential issues are temporary, um, the market will then react to these comments by offloading their hedges, right? So they probably bought a lot of puts before this meeting, and they would now see the risk and uncertainty from the FOMC event now removed. So they're now able to remove the puts and then buy calls. And more importantly, the rate hike probability for this year could even be revised lower. If we look at the Fed watch here, based on the last NFP jobs report results, um, there was we now had a probability of like 81% chance of rate increase in the December meeting. And if Kevin Warsh's comments are neutral, this could actually move down. So this probability of a rate hike in the December meeting could now be removed. And that'll have a pretty large impact on the market as the market reprices the probability of rate hikes. And that'll, affect a lot of things in the stock market, like the multiples applied in the stock market, stock price, and etc. So that will boost the market higher. And also, this Friday is a holiday. Due to this Friday is a market holiday, and whenever we have a long weekend, the market tends to sell volatility. And whenever they do that, that will lower volatility in the market. And volatility in the market is inversely correlated to the direction of the market. So if the volatility goes down, the market will go higher, right? So this will be an additional boost to the market going higher. And We also have monthly options expiration tomorrow. And because all these options will expire tomorrow, the delta hedging done by the market makers will be accelerating going into tomorrow as well. And given that the market will buy a lot of calls and sell puts after the FOMC meeting, the market makers will be largely buying stocks to delta hedge. And again, the pace of doing this will accelerate for the rest of the afternoon today, and also probably the rest of the day tomorrow after the outbacks as well. And I think this could potentially cause a gamma squeeze. Therefore, again, my baseline scenario, um, if Warsh's comments are neutral to dovish, the market will rally pretty hard this week through end of Thursday, and I think we might go beyond 7,600. And there's I wanted to put a little disclaimer in here. This is obviously only a baseline thesis, and it's really hard to predict, what this person's gonna do. So the range of possible events is huge, and there could be some surprises out of the left field, and the market can react drastically different from my baseline scenario. But for now, my thesis is that I'm bullish immediate to short term. So for the next week or so, I'm pretty bullish. And after that, I'm pretty bearish. So I'm gonna make another video over the weekend to kind of go over my thesis for the rest of June and some parts of July. But I think that the market will be bullish until maybe like Wednesday or Thursday next week, and then the market could reverse downwards after that. So keep an eye out for that. So that's the end of my video. So we'll see how the FOMC meeting pans out. And if you have any questions or comments, please leave comments and I'll try to respond to them. Thank you guys.